When I stopped overcomplicating trading is when I started to become profitable. I used to have so many indicators on the charts and I used to make it so complex that I couldn't even enter. And then when I would enter, I would be entering late because I'd be waiting for 100 different confluences before I could even enter. And my edge was just an absolute mess. And it wasn't until that I simplified everything that I was actually able to find my edge and keep repeating that to become profitable. And I wanted to run through my exact edge. Everything that I do, my strategy, absolutely everything, because it doesn't have to be super complex. It doesn't have to be difficult. You can be profitable with a simple strategy that you can repeat. You don't need all this crazy stuff. The basis of the strategy that I use for my edge is support and resistance and a bit of trend. Based off where the market's going, I'll use the trend as well. So for me, what I'm looking for sort of swing highs and swing lows on the chart. So I'm looking for where price went to an area and then had a major change. I'm not looking at sort of this choppy stuff in between here. I want these major turning points where prices hit a level and then change. And I'm doing this on the daily chart. I'm not doing it on the 5 minute. I'm not doing it on the 15 minute. I'm doing it on the higher time frames. The reason being, these levels get respected a lot more than what a support level would be doing on a 5 minute or a 15 minute. So what I'm looking for is the swing highs and the swing lows, and I'm not looking for drawing like a really thin line. Like I'm looking for a zone because I'm looking for like an area of interest. So somewhere where I'm looking at entering into position, somewhere where I can manage risk. So I'll be looking at zones and I'll be looking at current price action and I'll draw a zone. Doesn't have to be perfect because trading isn't perfect and the market doesn't move in that textbook perfect kind of way. So you just need to understand that it's never going to be perfect and you're going to have to make adjustments. So right now, I've drawn this support level here, which is now acting as resistance because price is now broken through and it's come back, tested, and it's been rejected again. It's now pushing down further. So what I'll look for now, I'll look for the next logical area where price may stop, the next support zone. So when in doubt, zoom out. So I'll look left and I'll have a look and I'll say, oh, well, where is most of the price action? Where is most of the rejections? It's probably around about here where price is now. So we'll pin it off this level and we'll come through and we'll draw the next zone. Doesn't have to be perfect. It does not have to be perfect. What I do next, I just set an alert at each level and that's it. And I'll just walk away. You can see here that this level didn't get respected. Prices crashed through. So now we're looking at the next one. But the important thing that I do for my edge is not to look at the charts, not to get sucked into wanting to babysit the charts and look at the charts every 2 seconds, because looking at the charts doesn't actually do anything. If you're looking at the charts, it doesn't mean it's going to go to the support zone because you're looking at it and you want it to go there. It's just going to make you think, I should take this trade. I'm going to take this position. I'm going to jump into the market. And all that's going to do is blow your edge and then you won't have an edge. And the only way to become profitable and the best way to become profitable is to build an edge, something you can stick to, something you can repeat 50, 60 times and keep going, because the psychology is going to kick in and it's going to make it harder and harder and harder. And if you can't follow your edge, you're just going to be making poor trading decisions. So when I'm looking for a trade, I'm looking for price to come into this zone. Rule of thumb that I usually follow is I want to enter into a position sort of if it's in resistance, I want to look at entering in the middle or sort of towards the top of the zone. Support, the middle, sometimes the bottom, but the middle is pretty good. So you sort of want to look at, I'm just going to get rid of this for a second. You sort of want to look at where price had most of the reactions. You can sort of see around this level is where price had most of the reactions. You can see the wick and it's sort of like where the dotted line is here, it lines up pretty much. It barely just hit it on this pullback to resistance here, but that's sort of where you want to look for your entries. You don't want to be trying to go, oh, I want to try to get an entry sort of all the way, up the top there. Like you're trying to look at, getting an entry up here somewhere, but price is actually here. Like you need to be realistic with your entries and you also need to be realistic with your take profits. So if I'm setting up a position, what I'll be looking at is where's somewhere likely that price can get to that is easy, not somewhere that's, over exaggerated. Like what's something easy price can get to. So I will jump on here, look at this tool, we'll put the price in, we'll go here and we'll put price above here. So we need to get a sort of we'll go for a 2-to-1. So this is a basic sort of setup. This is it. This is it. And the reason why I've done it here is I put my stop loss above the zone. I put it above the swing point. So then that way, if price breaks back up again, then it's back into it's either ranging or it's going to move into an uptrend. So you need to put the stop loss where the trade becomes invalidated, not somewhere that you think, oh, well, this might be good here, or I can only handle the loss here. I don't want to lose anymore. So I'll just put it right here. So you need to put the stop where you can handle it. So for example, if you're putting your entry right here, your stop loss right here, you can see that it's in the way. It's going to get wicked out. It's going to get hit so easy. And you're probably thinking, oh, I want to try to get a, 1 to 12 or these massive trades. Like you don't need that stuff, because when you're trying to do that, you're just going to put your stops in a bad spot, and you're just going to be targeting stuff that's, unrealistic. Like, can Bitcoin get to 86K? Maybe, but are you sort of running on hope there, or are you sort of calculating, okay, this is sort of my rules are, I enter into support or resistance, then I set my take profit just before the next zone, somewhere easy that price can get to. So you don't want to be trying to over exaggerate and catch something, super crazy. And then as well, when you are trading, I'm also looking at the structure. I'm also looking at, which way the market's going. Like right now, the market is clearly in a downtrend. So I'm going to lean towards taking short positions, because I'm going to trade with the market. I'm not going to be trying to front run and catch the bottom, or, catch the top, or whatever it is, work with the market. Don't go against it. So it can be tempting to sort of, you want to fade the trend and catch the pullbacks and whatever else, but it's not worth it, because 9 times out of 10, you're just going to get steamrolled and you're going to get stopped out. So I'll have a look, and even though I'm trading on the daily and I might get a couple trades a month, like, doesn't really matter. I'd rather get one really, really good trade in the month than try to take 4 average trades and end up losing money. Like, it's really not worth it. Like, honestly, it's not worth it at all. So because price is in a downtrend, I'll be looking at taking a short position. The reason why I've put the alert here is because I'm looking to see if price is going to break this level. I want to see if price is going to break it, it's going to push through, or if it's going to show rejection wick. So then that way I can sort of see where the next support zone is going to actually hold. So then I can sort of make better decisions on where I can take profit from the next, the next push down or the next leg down. So it's important, because you don't need to take every trade in the market. And for me, when I stop chasing every trade and I stop trying to take every single trade both ways, like, okay, I'm going to long and then I'm going to short, I'm going to long, I'm going to short, I'm going to long, I'm going to short, I'm going to long, I'm going to short. Because even right here, let's just look at this position right here. Like, if you had have long that, yeah, you would have got some profit, but like, there's not much in it. Like, there's not much in that move whatsoever. Like, if you had have long that, there's not much in it. Like 6%, or if you had, or if you just shorted and waited, you're up almost 9-10%, and the move's still going. Like, it's still pushing downwards. So like, don't fight the trend, trade with the trend. The trend is your friend until it isn't. So this is literally everything that I built my edge on. Like, I used to have so many EMAs. I used to have the MACD, the RSI. Like, I had 2, oscillators going at the same time, because I thought it, would give me more predictive power. When in reality, you can't predict the market, you can't predict the future, you can only trade with it. And this way, it's easier for you to manage risk. Like, if you're looking at this, this is just a nice, clean, easy chart. Like, for me, I can just look at this and say, I don't even have to think. Like, I literally don't even have to think. I can just look at this and go, okay, when price gets here, if I see a little bit of a rejection wick here, I'm going to short. Like, you want to look for, signs of the level's going to hold. Like, you don't want to be like, okay, well, I need to wait for price to sort of move out of the zone. You still want to enter in there, but you want to look at how it's reacting in the zone. Like, if you're seeing like a rejection wick, perfect. Sellers are stepping in. Like, that's literally all you can do. And I know it, you might be thinking, oh, well, you need all these confluences, but like, in reality, like, that's all you can do. Like, it doesn't matter how many confluences you have or how many indicators. Like, nothing is a guarantee. Like, nothing at all is a guarantee. So like, you could have literally an A plus setup that, hit your indicator said yes, your system said yes, and then you still lose a trade. Like something happens and it goes the other way. Like there's literally no guarantees. So like, yes, stack the odds in your favor, but nothing's a sure shot, like at all. And you just got to work with what you can. So instead of waiting and waiting and waiting for so many things to align, manage the risk and say, okay, if I get up here, the trade's invalid. I'm happy to lose that money. Cool. Just walk away. Just accept the money. Just accept it that it's gone before you enter, and just manage the risk, because that's literally all you can do. Like it doesn't matter how many confluences you have or indicators or whatever you have, right? The only thing that you can actually do is manage risk and manage your psychology and stay out of your own way. Stop forcing trades. Don't FOMO. Don't jump in, to trades that aren't your setup, or, breaking your rules or being in a rush to become, a, a multi-millionaire or whatever it is you might be looking at doing. But just keep it simple. Like this is literally how I built my edge. I just built my edge around support and resistance, like just something so simple and something repetitive. And if you're someone who finds that, you're needing so much guarantee and so much certainty and so much outcome, like trading is never going to give you that. And it doesn't matter what anybody tries to sell you online or whatever they try to tell you, nothing they are selling you can give you any certainty or any guaranteed outcome in the market. Doesn't matter what they say, unless they're a market maker and they control the markets. But if they're selling you something on YouTube, they're not a market maker. They have no control over the market. They don't have a prediction. Like a lot of people like to say, oh, I predict the market's going to go, I this, I that. Like you can't predict anything. I have no idea where the market, I have no idea where the market's going to go. Is it probably going to go lower? I don't know, maybe, but could it just shoot up? Absolutely. But just react to the market, react to what it's doing. Stop trying to predict. And that's another thing that, sort of helped me and was a big change for me was, not predicting, sorry, and just reacting. And I know I've spoken about it before, but it's so important. And just react to what it's telling you. Stop trying to front run, stop trying to predict, stop trying to, control the narrative, and just manage risk. So this is literally all I do. And it's nothing out of control. It's nothing super fancy. There's no, mythical golden, solution for anything. Like trading is literally mindset and having something simple that you can replicate all the time. Like, and just because this trading strategy is simple doesn't mean it's going to be easy, because there's still the psychology issues that you have to deal with, and that stuff takes time. Like it really takes time. And the reason why having something simple is because you can build those reps in over and over and over again, and work on building that trust in your system, and work on being consistent and being disciplined with following what you need to do. Even when you have a losing trade and even when you have a bit of drawdown, you're able to replicate it because it's so easy. Like you don't even have to think. You shouldn't have to think about what you're going to do. You just should know, and you should pre-plan it. And that's what I do as well. I forgot to mention that. I pre-plan everything. So instead of jumping on the charts and looking at it and trying to make an in the moment decision about whether or not I should buy or sell and putting money on the line and freaking out, I just pre-plan it. I will look at the charts and I'll sit down and I'll write on my notes, when price hits here, I'm going to do A. If price hits here, I'm going to do B. And then when price hits there, you set it, you set your limit order in, you plan it all out, and then you just walk away. And yeah, your trade might not get, like it might not get hit. That's normal. Your trade might get hit and it might win. That's normal. And then your trade might not, your trade might hit and hit your stop loss. That's also normal, because that's just trading and you can't win absolutely everything. So just keep it simple, and just, you don't have to use, support and resistance. But for me, this is how I was able to build an edge, because I was, searching on YouTube videos. Like every loss I had, I need more indicators. I need more indicators. I need more guarantees. I need more guarantees. You're never going to get it. And I would just keep searching for it, and it just made it harder and harder and harder for me to trade. And I actually had no idea what my edge was. But it wasn't until I stripped everything back and just kept it simple and just kept it clean. It's easy to look at. You can look at these charts and just say, okay, price is in a downtrend. When it gets to here, I'm going to short. How easy is that? You're not waiting for the full moon on a Wednesday night at, with the Gemini rising sun or whatever the crazy stuff is, like that psychotic stuff that people are trying to sell you on. Like, how easy is that? When price hits this level, I'm going to short because it's in a downtrend. That's it. How easy is that? That's it. Keep it simple. And if you have any questions, just drop them in the comments. I have a free Discord as well. It's just full of traders, just learning how to trade, just discussing trade ideas. You're more than welcome to join. We'd love to have you there. And thank you again for watching, and I'll see you on the next one.